Want to get to some breaking news. Existing home sales. A report from the National Association of Realtors is out, and taking a look at the numbers that we're getting. Existing home sales falling 4.1%. It's the lowest rating that we've seen since August of 2010. That 4.1% drop follows a 2.2% drop that we saw the previous month back in September. Low supply once again pushing up those home prices, rising 3.4% from a year ago to $391,800. So certainly a continuation of the trend that we've seen play out within the housing market.
Yeah, we've got a quote here as well from the National Association of Realtors and Yahoo Finance guests time after time. Chief Economist Lawrence Yun saying prospective home buyers experiencing another difficult month due to the persistent lack of housing inventory, the highest mortgage rates in a generation. Multiple offers, however, still occurring, especially on a starter and mid-priced home basis, even as price concessions are happening in the upper end of the market. And with much more on this data, let's bring in Yahoo Finance's Danny Romero. Danny, you've been tracking this on a much more long-standing time frame as well, but I mean, us hitting a level that we haven't seen since August of 2010, what does that spell out for us here?
Brad, we were expecting this. I mean, mortgage rates hit a 23-year high in October. They were hovering closer to that 8%, sidelining many potential buyers. The National Association of Realtors reported that existing home sales dropped in October to an annual rate of 3.79 million homes. That's lower than what the street was expecting of a 3.9 million range. What happened during this month? Well, mortgage rates were hovering closer to that 8%. Sellers were getting really antsy and offering concessions, whether that was cash for repairs or mortgage rate buy downs. That's been a big incentive across the board, not just for sellers, but also for builders. That's when you upfront the cost to lower down the rate on the loan. Very popular, but there's still not enough inventory out there, which is really driving up the prices across the board. The median sales price went up 3.4% over the last year. In all four regions across the country, we're experiencing price increases. But it's not all bad news. Alto's research actually found that sellers aren't holding back anymore. They're actually getting into the market. They're listing their homes. They're taking somewhat of a leap of faith. And that could be because mortgage rates have come down from their highs, but more inventory equals more transactions for 2024. And that's a good thing. That means there's going to be more sales going on for next year. And that's really good momentum. And overall, the National Association of Realtors is forecasting existing home sales to increase 15% by next year, and mortgage rates to range between 6 to 7%.
Danny, any idea what we're seeing, just more broadly speaking, on a regional basis? Because we certainly have seen different areas of the country, some of the pressure within the housing market play out a bit differently, a bit slowly than others.
Alto's research, they really pointed out in their inventory recap that really the dominance still remains in the Florida markets, which, obviously there's been a lot of migration in those areas. But if they're listing homes in those regions, that means that there has to be somewhat of an incentive going on. I mean, we've been seeing incentives across the board, and they've actually been driving up sales. So if anything, will we see it on this side of the coast? Possibly not. I think sales are going to range on the lower end. But when it comes to the Florida market, the Sun Belts, there's definitely a lot of dominance there. And obviously sellers are not they're not holding back right now. They're getting to the water.
Yeah, certainly there's demand there. Supply, though, obviously really continues to be the issue. All right, Danny, thanks so much.